We'll get started in just a few moments. Excellent. Good morning and welcome to this live Ask Me Anything About Property Investing. My name is Hussain. I'm here for about half an hour really to answer your questions around investing in property. Now, these are sessions we used to run before a few months ago, and we've just recently restarted those. But I'm trying them at a few different times just to see which is the one that works best. So this is the first one that we're doing in a midweek in the morning. So it'll be interesting to see how this works out. So let me know you can see and hear me okay. So we'll be good to go in a moment. So if you've got any questions around investing in property, as I said, I'm here for about half an hour to answer those for you. Now, we're live streaming on a few different platforms, so Facebook, YouTube, LinkedIn, and Instagram, and Twitter as well, I think. And so if you've got a question, just pop it in the comment section within that platform, and I'll do my very best to answer that question for you. So these sessions really came about as people were asking me questions about investing in property, and very similar questions would get asked, but with a slight variation. So I thought the easiest way to do that would just be do a live session and answer these questions. And then the questions varied, and we ran it for about a year, where we were doing these sessions on a Monday evening. And we took a break for a few months where we were working on other things. One of the things we're building out the studio, a training suite as well, so we can start running more training programs, which hopefully you'll start seeing more information on that in the coming weeks, particularly around sourcing property, finding money for deals, because I believe they're the two key things you need to get right: the ability to be able to find good deals, and of course being able to find the money to be able to fund those deals. And then all different types of strategies I might be using. Some of my more favorite ones are creative strategies, which give you control over a property rather than ownership, but still enable you to make very good money. HMOs, service accommodation, developments. They're the sort of things that we'll be talking more about on the training programs. So let me know if you've got a question that you want me to answer. As I said, I'll be here for about half an hour. If there's no question, this will be a very short session. So I'll just fire up with questions as and when you are ready. So we're going through some interesting changes at the moment within the property market overall. There's been a massive boom over the last few months, if you like, particularly as people feel the stamp duty deadline comes to an end, that they really need to get a deal across the line or a purchase done before then, and that's caused a huge spike. Conversations I've been having with agents over the last few weeks has been a little bit mixed. Some have been saying it's still very active, very strong, that they're selling things very quickly. Others have said to me, well, things are starting to just slow just a little bit. They're starting to see the massive drive that was there a couple of months ago is not quite there now, even though there's still good interest. So maybe we're at that point we might start seeing a little bit easing off on the property market. It may be that it's not going to be as hot as it was. I certainly think things are going to start to cool off a little bit towards the end of the year, and I think now is a good time to be ramping up your marketing activities, especially for more direct to vendor type marketing, which we'll be doing more of ourselves. And I'll be talking about that in a short while. So Cal, let's start with the questions. If you get the first question up on the screen for me. So the first question is from Ahmad on Facebook. Ahmad, good to see you here. What could one do to mitigate loss in a sale process where we have invested in searches, applications, etc., but the vendor decides to pull out a week before completion? Now, this is a bit frustrating. It's frustrating because you're preparing to be able to complete on that transaction, be able to get the purchase done. You've got your mortgage lined up, your searches, your legals, everything's pretty much done. And if your seller decides that they don't want to go ahead, they're pulling out for whatever reason, under the process that works in England, that means they've got the right to do that, as have you the right to be able to pull out of that transaction before exchange of contracts. But then, of course, it does mean everyone's lumbered with the costs on either side. So you're still paying your solicitor because they've done most of the work that they needed to do anyway, regardless of the fact that you don't have a property show at the end. You have spent money on searches, as you mentioned. There may be a mortgage broker fees, even if you haven't drawn down on the mortgage, valuation fees. So all these costs you incur. So some of it's a case of, one view is you just have to take it on the chin. It's part and parcel of what we do. And if it happens now and then, it's just, something you have to absorb. The other thing you can do is make it clear with the seller that you've got something, particularly if this is direct to vendor, when you're speaking to them directly, that if they pull out, that there's some kind of penalty in place. If you don't complete with a certain amount of time, there's a penalty for them as well. So it's a little bit more fair on both sides. So that way, everyone's got a vested interest in making it work. But unfortunately, the reality is that it's very difficult to really mitigate for that. It's keeping your seller on board is what I've found as being the most effective way to minimize transactions failing. What I mean by that is you're regularly communicating with them, you're talking to them about the transaction, even if it's say once a week, you're touching base with them. Even if there's nothing to report, just to let them know that actually we're just waiting for this or waiting for that. There's no other news. I just wanted to catch up with you. And that way, you know, one, you're building rapport and a relationship with them, but two, also it will give you an early indication if there's some concerns, there's something going on. Because let's face it, the chance of somebody pulling out at the very last minute is not something they would have woke up that morning and made the decision. Actually, I think I'll just change my mind and not sell this property. It would have been something that's been playing on their mind for a little while. And as it's got closer to the deadline, they've decided to pull the plug. But if you had a conversation going with them, it means that you're just reducing the chances of that happening because you know what's going on with them. So Imad, I hope that helps. And we're meeting on Saturday on the Inner Circle meeting that we have this Saturday. Imad's coming along to that. So let's get our next question up on the screen, Cal. And just before we do the next question, if you're watching, particularly if you're watching for the first time, you know, let me know where you're watching from. And if it's something you've been on before in terms of ask questions on my live Q&A before, let me know which slots you think work best. As I said, the first one that we're doing in a midweek morning, just to see how this works. So our next question is on LinkedIn. So Khalid's copied and pasted this across from Josh Kent. Would like to start on a property development path for myself and have been building out sites for others, but don't yet have capital to start. Any tips for suitable finance routes and options? And I think the last word in your question is quite key, options, in terms of option contracts, being able to control property. So it sounds like, Josh, that you have the knowledge and understanding on how to build out a particular site. So if you have the plans, you have the plot, you can build that out. You've got that skill. That's something you've been doing. What really you want to do is, rather than doing this for other people and getting other people richer doing your hard work, is for you to benefit from some of that yourself. And one of the best ways to do that is look to ensure that you're adding massive value to what you're doing. And the way to do that is that if you're going to be building something out that makes a significant profit, there's always going to be people that want to get involved, want a piece of that pie, whether it's traditional funders like your development finance funders, whether it's bridging funders, or my preference, private finance. Because if there's enough, if there's enough in it, there'd be plenty of people that will want to share that with you. But the important thing is that they have confidence in your ability to be able to turn that project around. So the thing that I'll be doing at this stage, Josh, is making sure that you're building up information around your experience, the thing that you've done, the people around you that you're going to pull into this project. So for example, it may be that you've got a skill in a certain part of building, but not necessarily the whole project. However, there's other people you know that are willing to work with you that you're going to pull onto the project with you. There might be QSs, there might be other specialist people, architects, whoever it might be. They're going to be working with you in terms of delivering that project. And that's your team that you're going to be working with. When you've got that information together, you know, that could be in a written form. It could be on your website. It could be on social media. However it is, it at least allows people that are looking at funding projects for you to look at who's going to be involved, how's this going to work, to give them some sort of confidence and reassurance. And of course, with your traditional lenders as well, and in private investors, they want to make sure that their capital is protected. So they'll be looking for security on the site that they'll fund. So you still could have a shortfall. And that shortfall is really what I'd look for private finance to do that. Depending on what it is you're trying to do, there's a few things. You've got, as I started off on this Q&A, saying you've got to be able to find the deals, which is the site. So if you found the sites, then that's definitely one tick in the box. Then you need the money to be able to do those deals, which is what we're talking about just now in terms of raising that money. And the third thing, of course, is the knowledge, and that's the thing that you already have. So it's finding the money seems to be where the gap is. But if you've got very good deals, I'm sure you can find the money. And you can message me directly. I think it's on LinkedIn that you posted. just send me a message online. If you've got a specific deal, I can try and connect you with somebody that might be interested in funding it for you. If it's in the Midlands, we'd be interested in maybe looking at that with you as well. And of course, that's a great way to start, which is how I started, which is partnering with other people to build a business rather than trying to do it all on my own. So Josh, I hope that helps. Hope that answers your question. Let's get the next question up on screen then. Cal, this is from Umair on YouTube. Hi Saj, your video about split title was really good. Is there any chance you can do a video on key steps involved in doing one? Permissions required, utility meters, and other changes required? Yes, so Umair, it's a great question. So on YouTube, what I try and do is give an overview of how certain things work. And I think I probably give more detail than most people that create YouTube content around property investing. So they're not fluffy, they get into the nitty-gritty of how to do things. But of course, you can't really build out a whole training session on a YouTube video either. And my intention is to run more training programs, in-person programs at our Birmingham Training Suite, which we've just set up there, where we'll start deep diving into these things in much more detail. So YouTube will really give an overview on how certain things work. And if it's something you want to get involved in more, then we'd be happy to look at that with you and support you with that. Title splits is certainly a good way of making money from property because very few people understand it, and for most cases these things are just hidden in plain sight. Most people don't know that they're there and that there's an opportunity there for those. So I hope that answers your question for you there, Umair. Our next question is from LinkedIn. And this is from Mikhail Consultancy. Do I need planning now for HMO properties as I'm looking in going for my first project? So Mikhail, I think the
It's Saj Hussain from Mikhail Consultancy.
Oh, right. Okay. So Saj Hussain, great name, by the way. So if you're basing an Article 4 area, then essentially what that means is the council, the local authority, they've removed your permitted development rights, your ability to take, say, a regular family house and turn it into a HMO. So from a planning classification, change it from a C3, which is a family house, into a C4, which is a HMO, where you've got unrelated people living together, up to 6 people, which is how we've always done it in Birmingham. That's how we've built most of our portfolios, taking on traditional family houses and converting them into HMOs. Now, if we do that, say today in Birmingham, because Birmingham now is an Article 4 area, that means that we now have to apply for planning permission as soon as we have 3 unrelated people. So if you have 2 unrelated people living together, but if you've got 3 unrelated people living together, then technically that's a HMO and you need to apply for planning permission. And depending on where the property is and the criteria, in some parts of Birmingham that might be fairly straightforward. In other parts of Birmingham, you might find that the local authority may not be that supportive of that. It just really depends on the what it is and where it is you're trying to create it. And if you're not based in Birmingham, you just need to look at your local authority website, look under HMO, Article 4, or if you're unsure, just send your planning office an email and ask them to confirm that the local area is not an Article 4 area and that permitted development rights do exist to change a C3 family house into a C4 HMO. And they should be able to help you then with that. And if you are in Article 4 area, then yes, you require planning, but that doesn't mean it's not possible. You just have another layer of things to deal with, another hurdle that you need to jump over to be able to do that. And remember, the more difficult things are, the less people want to do them. So that means the greater the opportunity because the less the competition is there. Thank you for that. So next question is on YouTube, Sweetie A. Once you have acquired an already tenanted rent to HMO, do you issue the tenants with a new AST contract, or is it possible for them to continue using the one the landlord has already given them? So Sweetie, the tenant's contract will still be valid. What you need to do is serve them notice, and I can't remember the name of the notice. Essentially, you need to give them a notice that you are the new landlord and how they can contact you, i.e. your contact details. You have to serve them on the tenants legally so they know who the landlord is, but their current contracts are still valid. So whatever terms the old landlord signed up to, those are still valid and they still apply, and none of those things have changed. You effectively now just become responsible for that property. But with rent to rent and rent to HMO, you need to be careful in terms of how you structure those deals, because I see many people setting them up incorrectly. And often people don't even realize they're not right until something goes wrong. There's a problem. They're trying to evict a tenant. They've got a rent arrears issue. Or at that point, they realize actually their paperwork isn't quite correct. So if you're leasing the property, you're effectively becoming the landlord of that property, and then you're then issuing tenancies out for your tenants. If it's a management agreement, then technically you are not the landlord. What you're doing is managing the property on behalf of the landlord as a HMO. So yes, you can still collect the rent, you can still administer tenancies, but you are not the person named on the tenancy as the landlord. And that way, if that is your setup, then you don't need to serve tenants a notice as a change of landlord, because there isn't a change of landlord. There's just a change of managing agent, i.e. the individual or business responsible for looking after the house. So a little bit of detail to be mindful of there in terms of how you do that. Personally speaking, my preference is to get a property vacant rather than tenanted. And if we end up in a situation where a property is tenanted, then ideally what we want to do is to sign them up into new tenancy agreements with ourselves rather than use the previous ones. One, we know we've got good quality contracts. And secondly, we make sure all the compliance side is being taken care of, such as their deposit being registered correctly, all the relevant documents being served on the tenant, all the ID documents held on file correctly. It just means that we make sure we do all the things correctly at the beginning of that tenancy rather than inheriting somebody else's tenancy contract and setup that we may not be entirely happy with. So, Sweetie, I hope that helps you with that. Let's get our next question up on screen, which is Qazi Alam on YouTube. Hi, Saj. I've purchased a 3-bed house which has a cellar 6 foot high. I want to convert it to a 4-bed HMO. Can I turn the cellar into a required living room, though it's low height? So, Qazi, you need to make sure the property complies with building regs for any work that you're going to do, for example, in the basement. That would mean there needs to be a means of escape. There needs to be certain height. There needs to be windows for light and ventilation as well. So it's not just a case of I'm only going to rent the basement to people that are of a certain height. The property still needs to be compliant for you to be able to do that. And then, of course, check with your local council, your local authority who's issuing the license to make sure that they're happy with you using a basement, because some aren't, some are. In Birmingham, often we tend to use the basements when we have them for plant rooms, utility rooms, storage, rather than using it as lounge space. But sometimes you could have a room that you want to use for habitable space. You just need to make sure it complies. One of my mentees on our Inner Circle mentoring program, he's just doing a project right now where the basement he wants to convert to use as one of the bedrooms in the HMO, and it's just satisfying the local authorities to make sure that they're happy with that. So I hope that answers your question there for you, Qazi. Just before we do the next question, let me know where you're listening and watching from. It's just useful and interesting for me to see where people are tuning in from to watch this. And also, do let me know when you think is the best time of the day and week to run this live Q&A. As I said, I'm testing a few different time slots just to see which works really best. And this is the first one that we're doing. That's a midweek morning. So, Cal, let's get the next question up on the screen. This is on Instagram. Lord Ramses, thank you very much for that, Cal. Hi, Saj, how do you know if the property will get a HMO license in Article 4 area before buying any red lights in advance? So 2 different things there that you need to be aware of. The Article 4 and licensing are 2 completely different things. And I've got 2 videos on my YouTube channel where I'll go into these in a lot more detail, explaining that they are different and how they are different, and why both of them is what you need to be aware of. So in an Article 4 area, you could still get a property license. So I could take a property right now, convert it into a HMO, get a license issued on it, but the license will probably be subject to the fact that I have to get planning approval first to be able to operate it. So that means the house can be licensable, you can be a licensable individual, i.e. they'll issue the license to you on that property, to say, yes, it meets all the requirements, it's safe, the fire risks, everything, but you still can't run it and you still can't have anybody living in it until you've got planning permission to be able to operate it in that way. So if I was in an Article 4 area, purchasing a property I want to convert into a HMO, as for example, here we are in Birmingham, then you want to make sure that you're de-risking that as much as you possibly can. So that means if I'm going to be spending, say, £250,000, as we typically would do when we're purchasing a property to convert to a HMO, but I don't know if I'm going to get planning, that's way too risky in my mind. So I would do that subject to be able to get the relevant planning approvals. That means my offer is on the basis that I can get the relevant planning I need, and I'll then complete on that basis. If I'm not able to get the relevant planning approval I need, then I won't go ahead with the purchase. And I'll make that clear up front to the seller agent or whoever's involved. So I hope that helps you with that. So just looking in terms of people are watching from London, Birmingham massive, Leicester, Essex. Thank you very much for that. So let's get our next question up on the screen. This is from Adam C on YouTube. Hi Saj, I have 30k in my savings. I want to know how I invest it. And since I'm new to property and busy with my job, how do I find a partner to do joint venture with? So there's a couple of different things there in terms of how to start with £30,000. £30,000, is a lot of money that you've managed to save, but in the context of property, it's not going to get you very much. So, for example, where we are in Birmingham, you'd probably be very, very lucky to maybe get that down as a deposit for a starter type of property, maybe an apartment or a small house. But that's not going to get you very far, and then you're soon going to run out of money, and that's not going to get you very much income as well. So the first thing I'd say is, look, before you start looking at how to invest, think about why you want to invest. What is the objective ultimately you're trying to achieve? Is it you're trying to build up some income right now? Is it because you're trying to create income for the future? So that might mean in a few years' time, you would just want to maybe not work as much, so you've got an additional income. Or it might be that you're just investing for the long term. Like I have a number of people in the medical background, like doctors, dentists, pharmaceutical background, who invest with me, who do very well. They earn very good money right now from their day job. So they're not necessarily looking to make money today. What they're doing is investing to build up a portfolio for the longer term, so that when they either want to reduce the amount of hours they do at work, or they want to stop working, that they've now got an additional income. So it's thinking about, first of all, why is it that you want to invest? Because that will then drive what type of strategy you do. So the other thing you mentioned is that you're quite busy with your job. So with property, you need time, you need knowledge, you need money. And if you've got a small amount of money, you've got very little time, and I'm not sure where your knowledge level is right now, whether you're kind of a complete beginner with very little knowledge. You could be a complete beginner but have a good understanding of what you need to do as well. But then it's thinking about who can you work with to leverage that. And really, when you're talking about joint ventures, particularly when we're talking about buy-to-let property, these are long-term relationships. I often say this, that some of these relationships will last longer than an average marriage might last. So you want to make sure that you partner with somebody that you're happy with, that you've got a connection in terms of values and ethics and what it is that you're trying to both achieve, why you both would benefit from working each other, how are you both different in terms of what you bring to the table, in terms of a business setup, and how are you both the same in terms of, for example, values as well. And this is not going to happen by meeting somebody first time at a property network meeting and say, hey, great, looks like we both want to do similar kind of things. Why don't we just go into business together? Because that's, in my mind, just going to be a recipe for disaster. Ultimately, what you want to be able to do is really take the time to get to know people, see if it's the right type of person you want to work with. And rather than making the decision to build a business or property empire with them, what you're doing is maybe doing one transaction, maybe it's a short transaction, just so you can get a feel for what it's like working with somebody else and that person in particular. So shorter transaction might be, for example, a flip where you're just purchasing something, you're going to add some value, you're going to sell it on. You're not really looking to keep it for the long term. And so that means, maybe in 6 months or a year, you'll be out of that transaction and you'll have gone full cycle working with this other person just to get a sense for how that's been and how that's worked out. And I've met people as well who have met each other, say at networking events, which that's how a lot of people meet, and that's how a lot of my early partners and investors I met as well. they'll go through the expense of setting up new companies and the shareholder agreements and spend thousands of pounds getting all this set up. They haven't really got clear what type of stuff they're going to do, or they might have an idea what they're going to do, but they haven't even tried to see if they can find those properties, or is the financing going to work that they were thinking it's going to work, and it just turns into a bit of a disaster. One tip I can give you there, I think it's Adam that asked a question. One tip I can give you there is when I started out initially in business, not just property, I would resonate with people that I thought I could essentially you create a connection with. And this, most people do this. You'll connect with somebody, you think, oh, I like this person, they're on my wavelength, and you'll say things like this, and really what you're doing is you're seeing bits of yourself in them, and that's what you're connecting with. And let's say you're very good at say being out there, meeting people, socializing, negotiating, finding deals, and you're that kind of personality, but you're actually not so great at the really detailed analytical stuff. And often that's the case, that those two things tend to be different personalities. But if you're then connecting with somebody who's very similar to you, and they're the same as well in terms of their personality profile, what you tend to find, and what I've experienced, is what you end up doing is amplifying those strengths, the things that you're really good at, but amplifying the weaknesses as well. Effectively, you've got an even bigger gap and hole in your business, the things that you both are not very good at. So it's thinking about how can you balance that out. And sometimes it's the case of, well, you need to bring a third party in. It could be an external person who's going to deal with that. But ideally, especially in the early days of a business, it really should be one of the two partners picks up those things, and they should be good at doing those things as well. So it's like the chalk and cheese is a good match rather than them both being exactly the same. So I hope that helps you with that. Let's get our next question up on screen, Cal. Mantaz on YouTube. Hi, Saj, what type of training can you provide to help me start at property investing? I'm from Birmingham. I have 10K in savings ready to invest. I know HMR might be a good start, BRR, flips. I'd say, what I said earlier on, before you start investing, you need to think about why you're investing. That's absolutely key, because that will then drive which direction you go in terms of strategy. So which is going to be the best fit. Again, a mistake that I made in my early days is when I was learning about all these different types of property investing strategies, I'd listen to speakers and presenters talk about how they're making huge amounts of money using one strategy. And I think, oh, wow, that's amazing. That's a strategy that I want to do. That's the one I want to follow. And what you see sometimes is a success that they've achieved. But what you don't see is the years and years of work that sometimes are put in to get to that point. And so these things don't necessarily happen overnight. And then another times I'll be speaking or seeing another presenter, and they're talking about a different strategy that's completely different from the previous one. And I'm thinking, this is the one that's for me. This is much more appealing. I feel that's the one I want to do. And I really just jumped around between different strategies. And it wasn't all lost, because ultimately what I ended up doing, I ended up building a massive amount of knowledge and experience by kind of trying all these different types of deals. And over time, I've done many, many strategies. Really, some of them just the opportunity presented themselves, and other times just to really test how different strategies could work for me. But what it meant was there was a lot of jumping around, and there was not really any focus. And the real shift for me happened when I was just focused on one thing. At the beginning, for me, it was sourcing good deals. So I just nailed down the skill of sourcing good quality property investing deals, and then slowly started partnering with other people over time as well to build that business. That's essentially how I started. But so when you think about why you want to invest, then you find which is going to be the right strategy. Then you see where the gaps are in terms of, it might be knowledge gaps that you need to learn how to do something. It might be that there's a resource gap in terms of, say, funding. You might need to be able to access a certain amount of money in order to be able to do those type of deals. Because if you're starting with, say, £10,000, I think, as you mentioned, that's not really going to be put you in a position where you're going to be able to buy much property unless you go into some of the more cheaper towns. You're really going to struggle to purchase. So it's thinking about the more creative type deals in terms of those that give you control. And it may be location also you need to think about. So, I don't know where you are. Let's say you live in London, and doing some of the more creative stuff can sometimes be a challenge because the property values are much higher. Then now you need somebody else to maybe work with who's further away that you can maybe have as a potential partner. Or alternatively, you'd look at areas that you can say get to. For me, the radius tends to be about 40 minutes. If I can get to in about 40 minutes, that tends to be the radius of what we work in from our Birmingham office. That's the deals that we look at. Beyond that, we're not particularly interested in looking at those things. So these are all the factors you got to think about, how much money, how much time you've got, where you're based in the country. Also the timing of the property cycle has a big factor. Right now, the market is hot, it's on fire, it's booming. So the type of deals you can do as well is also changes. So for instance, if you're looking for below market value, discounted property, 25% off value, you're really going to struggle to do that in a market like this that's buoyant and hot. So these are the factors that you have to think about in terms of how we can help. The trainings that we'll be running initially is really nailing down your strategy and making sure that you're clear, you understand the different ways to invest in property and having a clear plan. And then we'll have some programs specifically around the sort of stuff that we've done before, which is finding property, finding money for property deals, HMO, service accommodation, flipping properties, developing. These are sort of key areas that we'll be focusing on with our trainings. Just ping us a message on whichever platform that you are watching on now. Send us a PM and we'll keep you posted as and when those start, hopefully in the not too distant future. So let's get our next question. Is this our last question, or we got one more after this one? So make sure you get it in if your question is still not answered, and then Cal will pick the next one for us. So this is on YouTube. Wagner 1980. Hi Saj, I have a house where we live. I'd like to buy an investment property next year. If I manage to do that, then I'd like to change my family home. Would I be paying higher stamp duty? So if you, so the question really is, if you're buying a second property, then you've got to pay the higher stamp duty, i.e. the additional 3% that we pay as investors. But when you're buying your home, you pay the regular stamp duty, whichever bracket that falls into, which currently is still being reduced to under £250,000. There's still no stamp duty until the end of this month, September. Then it will revert back to what it was previously at the different tiered levels. Now, if you sell your home and buy another home, then you still pay the regular stamp duty. It's only if you purchase an additional property that you'd pay the higher stamp duty. So your investment property that you'd purchase, then yes, you'd be paying stamp duty, the higher stamp duty on that. But when you sell your home or change that into another property, as long as it's one home that you've got, then you will only pay the regular stamp duty on that. Hope that answers your question for you there. And let's get our last question up before we wrap up for this evening. And remember, we'll be back. I'm doing these at a few different times of the week just to get a feel for which might be the best time to run these again as a regular thing. So of course, please do let us know when you think is the best time of day and day of week that we should be running these live streams. So the last question for this morning is from Riz on YouTube. Hi, do you offer one-to-one mentoring? Been investing for 8 years, need to go through the next level now. Yes, we do mentoring. We have mentoring at 3 levels, which is the startup, speed up, and scale up. Startup is really for those that are brand new, who don't really have any property experience, who are just starting out at the early days. So they've got a lot to learn during that phase as well. Then we've got the speed up. Speed up are generally people that are already doing property, might be doing property full time as well now. So their income is solely from property, and what they want to do is really scale that up and build that up to the next level. And then our third tier, the scale up level, is really for those that are looking at bigger projects and bigger developments, and we do mentoring there. So yeah, just reach out to us, send us a message on any of the social media platforms in terms of private message, and then we can have a chat about how we might be able to help you with that. So that just leaves me to say, first of all, thank you so much for giving up your this morning to be with me. Hopefully you found this useful. As I said, I plan to run more of these. If there's somebody else who you think should have been here today, could have benefited from this, then please do share this post with them. And then look out for when the next one is. We'll do a few different ones over the next week as well at different times. And then we'll create a regular slot where we can get back and do this on a weekly basis. I hope to see you soon. Thank you so much for joining us.